Good morning and welcome to the first full week of March as we get ready to talk about what's happening in the markets and the economy for this week. So, Dave will be with us in just a minute, and we look forward to speaking to each other.
Goldberg, Katy Perry, and Juicy J there. It's 8:38, 22 here before 9. Time to check in on your money, make sure my buttons are all in the right place, and find out what's going on Wall Street. Phillip Statler is in the office from Statler Financial Services in downtown Sebring. He's plugged in, but boy, is it a quiet start to the week news-wise, Phillip, right?
Yeah, it really is, Dave, and but I'm glad to be back. Hey, had a great couple days last week, sitting in with a group of advisors where we really and truly get together and do a mastermind and really kind of learn from each other. So it was a
I,
great time.
I know you do these continuing education things once in a while. Tell me a little bit more about the session. Was this with a leader of star quality, or basically a whole bunch of experts like you, sharing thoughts and experiences?
It was literally a group of probably 15 of us in a round robin where we could share about different ways we're able to help our clients so that then we can learn from each other. So a great opportunity to exchange, and if you're having a difficulty in a certain area, you can share it, and 15 people will pipe in and say, hey, you might think about doing it this way. So great time that we had there, just learning from fellow advisors.
Absolutely. And a different outlook and a different viewpoint is always useful in every line of work, isn't it?
It really is. That way you get a different perspective from a lot of different people.
Absolutely. Well, bringing us up to date as far as the markets are concerned, the Friday, another up day. Actually, this one we can call a pretty decent day. The Dow was up by 110, NASDAQ up by 63, and the Standard & Poor's up by a little more than 19, which kind of put us past where one of your analysts was saying we had a resistance level in the upper 2790 range, I think. We're kind of defying some of the definitions of what we're supposed to be doing again, which really isn't out of the ordinary for the market these days because they're breaking just about every rule I've always used as a rule of thumb. How about you?
Well, that definitely seems to be the case. I mean, we're back up to what, 28, a little over, almost, not quite over 2,800. So we're kind of bumping our nose up against that again. So, it is, one of the things that we looked at different articles today, and what I'm talking about, the 10-year anniversary of what they call the start of this bear market, or the end. I mean, the start of the bull market, the end of the bear market, which was, I don't know if it's official or not, but you can say March 6th. The intraday low for the S&P 500 was $666, Dave.
Wow. And you look at it as, let's see, we closed at 2803.69 on Friday. So what that's about, doing math in my head, we're up by a 400% margin over where the low was in the process. That's borderline amazing given all the naysayers that we hear in the process, but it also kind of gives rise to what goes up got to come down again eventually, doesn't it?
Well, that's so true. I mean, one of the numbers that I thrown around out there was that's an average return of over 17% total return, guys. Now that's including the dividends that were paid out over that time period. So, but they measured that and they compared that to other, like the flash crash of '87 and different times like that, and that's in line with what those different time periods had done. So. But you're right. It doesn't mean this thing's going to keep going, and what goes up must come down. But it doesn't mean that's going to be inevitable here in the next 60, 90, 120 days. It just means that we are getting awful hot, and that at some point in time, we do have to make a reversal. And the question is just, when is that going to happen?
And the market behavior changes a little bit time by time as well. Sometimes it just goes flat for a year or so to allow the economic activity to catch up, and we don't actually go down. We just stay flat and do absolutely nothing, which for somebody getting close to retirement is no fun either.
Well, no, it's not. It's better than going backwards, that's for sure, though.
That's true, yeah. I mean, I would rather be flat than nothing. What do your analyst peers that you met with this past week say about the last one? We were talking before we went on the air that I know the definition of a bull market. It's from the bottom, and then we measure it from the way up. I've always said that's kind of like measuring being well from when you had your last case of the flu at the absolute dregs of the thing. You started getting a little bit better, and now you're fit. Now you can say that's my period of wellness. What do they say about that big dip that we had a couple of months ago? The NASDAQ did formally hit bear territory. The Dow and the S&P, if I remember correctly, they were down 19.6%. They didn't quite make 20%. Did they count that as the end of a bull? Are we starting another one, or are we still trying to celebrate 10 years to the 10 years on one continuous bull market?
You know, I've not seen anybody that has really come out and said that was the bear market for a short period of time. I think most people are looking at the textbook definition and saying we haven't hit there yet, because most of the analysts feel like we're still pretty frothy up here, and that at some point there has to be a pullback, whether that's this year or whether the trade talks and everything else keep pushing us forward. And it's not until 2020, 2021 after the elections. You know, nobody knows. Nobody's got that crystal ball that they can look at and say, here's when it's going to happen. All I can suggest is that folks need to be prepared on both sides of the spectrum. They need to be ready to participate if it keeps going up, and they need to be ready if the market takes a major pullback, especially if they're 5 years or less out from retirement.
Understood. Sounds to me like most of the smart talking heads are saying that 19.6% dip in the S&P was kind of the correction from hell instead of an actual bull downtick, right?
That's kind of what I'm seeing, Dave.
All right. Definitions are always fun down the line to be able to nitpick over, so I feel an obligation to pick nits every once in a while. Among the things that are buoying us up a little bit this morning, and nobody's got any hard data on this, it's mostly just rumors coming out of it, but the fact that we're still talking with China, some of the conventional wisdom is saying that a trade deal is not only close, but it might actually be imminent, including a complete lifting of tariffs, which got to be good news for investors.
Well, it definitely has to be a good news for investors, and I think that's what's helping us push up a little bit this morning. But the little headline I saw was I didn't see anything that said lifting all the tariffs. I said I saw some little blurbs that said, you know, they would be cutting some tariffs back. I saw another little blurb that said the U.S.-China deal may make our friends overseas not happy with us.
Aha. But it is one that you and I've talked about this. The Chinese markets have basically been in bear market mode now for a long time. They're recovering off of the rumors that the trade talks are productive, and that gives China an even stronger incentive to be able to work with us. The one concrete thing I heard was that they bandied about the notion of removing all the tariffs on agricultural products, which will make my farmers up in the Midwest a whole lot happier than they have been for the last 6 months. But hope springs eternal, at least, right?
That's right. You know, until they dot the I's and cross the T's, who knows what that thing's really going to look like. You know, we get little leaks here and there, enough to make the markets happy one day and then make them sad the next day. So until we get something, and the president and the prime minister or whoever in China comes out and says, hey, here's our deal, nobody really knows.
That's true. Old phrase, buy on the rumor, sell on the fact, right?
Yeah, that may be the thing to be doing here.
It sounds like what they are doing at the very least. Trade talk gossip coming out of different companies that we trade and talk about a lot. Tesla finally came out and introduced their $35,000 Model 3, which gets them into at least close to affordable range. And Elon Musk says that he's now going to start doing all of his business online. Gosh, maybe if you got Prime, you can get your Tesla in two days or less, right?
Yeah, you know, I'm don't know exactly how that model is going to work out, because, you know, there are some things that you can buy sight unseen, and with a return policy, you feel pretty good about that. But to buy a vehicle that you've never driven, you know, that gives me some pause, because you know, it's hard to make a decision to buy a vehicle anyway, and now you're going to take one more step out of that process. So, But the other thing they're going to do is they're releasing the Model Y SUV coming out the middle of this month.
Oh, that one I hadn't caught. The $35,000 Model 3 was the thing that caught my eye. They got an SUV now too, huh?
Yes, the Model Y is supposed to be unveiled on March 14th.
Okay. I share the same askance view of doing a car purchase online. I claim to be a pretty decisive shopper when I go car shopping and I decide I'm going to buy, but it still takes me a day or so of snooping and looking before I actually make a decision. Online is a little out of my wheelhouse.
Yeah, it is for me too. I mean, and, unless they're going to have different pockets where you can at least still go drive the vehicle to make sure that's what you really want.
Yeah, understood. Got some other company news that might affect trading for the early part of the week. I know it's a slow news day for a Monday and a slow news week in general going on.
It is. I have one earning, Children's Place, which is a children clothing retailer. They missed by almost 50% of what they were supposed to do. And so they missed on revenue also, and they've also reduced their outlook for the year significantly too. So they're getting beat up pretty good today. They're down almost 14% this morning.
Wowzers, they aren't on my list of winners and losers this morning, but they should be.
Yeah.
Setting the table for the morning, we had a green day on Wall Street on Friday, as mentioned. We've got some good news in terms of trade talk rumors going on. 45 minutes before we open this morning, Phillip, which way we heading so far?
Yeah, the indexes are all moving up in the green today, Dave. The Dow's up right at 100 points. The S&P 500 is up 10. NASDAQ's up 40 and a half. Gold and silver are both trading down significantly. Gold's down about 0.8%, $10 an ounce, and silver's down about 0.7% down, which is about 10 cents an ounce. So that's going to put gold at about $12.89 an ounce, and silver at $15.15 an ounce. Crude oil is still bouncing in there between $56 and $57 a barrel, up 1.2% this morning at $56.45 a barrel.
And on the world markets, Asia generally trading up on the rumors of good news from the trade talks. Europe generally trading up on the trade talks and the rumor that Theresa May over in Britain may just say, oh, let's just call the whole thing off for a few months as far as Brexit, which gives Europe a sense of stability as well. Phillip, somebody want to turn this information into a fruitful retirement for my family. How would I find you on the phone?
Give us a call at 382-0037. Follow us online at statlerfinancials.com. And then every weekend, join us for the Statler Financial Radio Show, noon on Saturday, 10 a.m. on Sunday mornings on News Talk 730. And then don't forget Facebook. Like our page at Statler Financial Services, where you can get these every morning if you happen to miss us. I know you want to listen to Dave, maybe not me, but hey, we're there every morning. So reposting this video. So thanks, Dave.
I just think it might be the other side because at the very least they show you on camera. I mean, I break camera lenses.
Hey, we can work on fixing that. You just let me in your studio for a little bit. I can get your camera all hooked up there.
No, thank you. You're welcome anytime except carrying lenses.
All right, man. I'll talk to you tomorrow.
Thank you. It's 105.7.
Hey, thanks for joining us today. Hey, if you need more information or if you'd like to schedule an appointment, click the link at the top of this post. You can always schedule there through our online scheduling service. So love to spend 30 minutes with you on the phone, but reach out to us. We look forward to doing this again tomorrow. Take care.